Welcome back for more stock market news updates. For more videos on the latest stock market news, go and press the like button and subscribe. With that being said, let's start the video. Investors' anxiety remained high as market volatility continued to be influenced by a series of economic indicators and corporate developments, driving mixed sentiments in the financial landscape. Here are the key highlights shaping the markets. As you may know, the recent decision by Fitch to downgrade the United States long-term credit rating from AAA to AA+, raised concerns among investors about the country's fiscal health. The downgrade reflects Fitch's apprehensions over the growing debt burden and political polarization. However, legendary investor Warren Buffett, often referred to as the Oracle of Omaha, dismissed the concerns. Buffett stated, "There are some things people shouldn't worry about, and this is one," reassuring investors that the U.S. economy remains robust, despite the credit rating adjustment. Nonetheless, the downgrade had a noticeable impact on investor sentiment, contributing to heightened selling pressure. This led to the Nasdaq experiencing its worst day since February, with technology stocks taking a significant hit, while chip makers like AMD and Qualcomm faced notable declines after reporting weak sales projections. Investors' worries about the future demand for semiconductors and the ongoing global chip shortage have contributed to the overall uncertainty in the tech sector, driving down stock prices. Market participants are closely monitoring developments in the semiconductor industry, as it plays a crucial role in various sectors, including consumer electronics, automotive, and data centers. Economic forecasts have undergone a considerable shift over the past year. Less than a year ago, numerous analysts and models predicted an imminent recession for the U.S. economy. However, the current outlook is more optimistic. Bank of America's economists were one of the first to reverse their recession prediction, citing solid consumer spending and cooling inflation as positive indicators. The latest data showed inflation cooling to 3% last month, providing some relief to market participants. Additionally, the Federal Reserve's recent interest rate hikes were accompanied by a projection of a recession-free 2023. Despite these improved forecasts, some analysts have cautioned that similar predictions of a soft landing were made before the 2000 and 2008 recessions, indicating that economic forecasting remains complex and uncertain. In other news, Amazon, known for its industry-disrupting capabilities, is making significant changes to its grocery business to gain a larger share of the $1.5 trillion U.S. grocery market dominated by Walmart and Kroger. The company's Amazon Fresh Delivery service is now available to non-Prime members in a dozen cities, with plans for nationwide expansion by year's end. Additionally, Amazon is revamping its physical stores, incorporating brighter colors, Krispy Kreme stands, and self-checkout lanes to provide a more appealing in-person shopping experience. This overhaul comes after previous challenges in Amazon's grocery ventures, and the market will closely watch for signs of success or further setbacks. The competition in the grocery sector is intense, and investors are assessing Amazon's ability to disrupt and transform the traditional grocery retail landscape. We also saw Starbucks report impressive sales growth of 12% to a record $9.2 billion in the last quarter, slightly below Wall Street's expectations. Cold drinks dominated U.S. beverage orders, accounting for 75% of sales, as consumers shifted preferences away from hot beverages. However, the standout performer was Starbucks' China segment, which experienced a remarkable 46% surge in same-store sales. Despite China being Starbucks' second-largest market after the U.S., it faced significant challenges during the zero-COVID era due to lockdowns and safety policies that impacted in-store sales. The recent strong performance indicates a recovery in the Chinese market, although coffee consumption in China remains significantly lower than in the U.S. Investors are watching Starbucks' expansion strategies in China, as it represents a crucial growth opportunity for the coffee giant. In crypto news, we have WorldCoin, a cryptocurrency project that offers unique digital IDs through iScans, which has garnered more than 2 million signups. However, the project is facing pushback from privacy watchdogs in various countries. Kenya recently ordered WorldCoin to suspend user enrollment over privacy concerns. France, Germany, and the UK have also opened investigations into the project's legality. The use of biometric data in creating digital IDs has raised concerns about potential risks for users and data security. As global regulators focus on data privacy and protection, investors are closely monitoring WorldCoin's response to regulatory inquiries and how it may impact its future operations. In automotive news, we witnessed Ford's U.S. sales rise approximately 6% in July, despite a slowdown in its electric vehicle business. The company anticipates its EV unit to face a $4.5 billion loss this year, as sales stall amid factory upgrades and supply chain challenges. The electric vehicle market is highly competitive, and Ford's challenges reflect broader industry dynamics as automakers invest heavily in EV technology and infrastructure. Xpeng, a Chinese EV manufacturer, saw its head of autonomous driving depart the company with rumors suggesting he may join NVIDIA. This move highlights the intense competition for talent and technology within the EV space. These developments underscore the transformative shifts in the automotive industry as companies navigate the transition to electric and autonomous vehicles. Lastly, Amazon, Google, Microsoft, and Meta are facing pressure to leave the U.S. Chamber of Commerce due to concerns about the lobbying group's climate record. A report has accused the chamber of deterring climate policy for the past 2 decades. As major tech companies increasingly prioritize sustainability efforts, their association with a lobbying group seen as obstructing climate policy has raised scrutiny and may prompt further evaluations of their corporate responsibility practices. Investors are monitoring how these companies respond to the pressure and whether they align their advocacy efforts with their stated climate goals. Market participants remain cautious amid economic uncertainties and changing corporate dynamics. Investors will closely monitor economic data releases, corporate earnings reports, and regulatory developments to make informed decisions in these turbulent times. As the market navigates through challenges and opportunities, investors must exercise prudence and adapt to the evolving market landscape. That is all the stock market news updates I have for today, but subscribe for more videos like this one. And with that being said, happy investing.